Now, what exactly is market structure? The word market structure simply means understanding the structural aspect of the candles. Now, we're not going to be using market in this scenario because I want to make everything very, very easy to understand, which will involve me bringing my notes. Now, when I'm talking about these notes, I'm explaining in details what I mean by market structure. So now, what exactly is market structure? The word structure means the structural arrangement of these candles, and every single candle have their meaning. This video is not really going to be long, but I hope it explains it in details, and I'm going to be showing you some chart work understanding market structure. Now, structure is the structural arrangement, I will use that word, of candles. All right, so now when you see series of candles, you want to know what exactly are they trying to say. Now, I understand that so many traders understand structure as lower high, lower low, and all this stuff. Damn, this stuff almost fell down. Imagine 1 million dropping on the ground. Be crazy. Nevertheless, imagine having a candle go up like this, like this, like this, and then you see it drop down like this again, dropping down, and then starts to go up again, up, then it gets to this place and starts dropping down. All right? You might be asking yourself, why didn't it get to this place before it starts dropping down? Now, this is what is called a lower high. All right? That is what is called a lower high. Lower high. Now, this is actually high, but not as high as the previous one. That is why the high is lower. All right? That is why the high is lower, which I'm going to be calling it lower high. Not to worry, you're going to be seeing this on the screen. So now, this is the higher high. All right? Now, for this pattern to continue going down, it needs to still create sequential lower highs that is not as high as the previous high. All right? Now, let me break this down for you better. Let us go again. Now, you can see the way the market started dropping, right? Now, it keeps on going down like that. It keeps on going down like that, just like that. And then it starts to go up again. All right? Starts to go up again. And again, it didn't get to this point. It starts to come down again. Starts to come down. Now, you might ask yourself, why exactly isn't it getting to this point? Now, there is something they call a support level that is dynamic. All right? Dynamic in English language means change. Now, when there is a support level that is dynamic, it means that there is something that needs to happen before the support level can actually change. Now, when a support is broken, you might be asking yourself, how exactly do I know when it wants to change? Now, pay attention to this. When a support is broken, it becomes a resistance. Automatically, that is a law. All right? Just as this world, when we no longer exist. All right? So now, that is a law. We're not going to be seen again when we buy, of course. So now, what am I trying to make you understand? That this was a support level, this zone here was a support level that took the market to the upside. But then, you can see the candle breaking through it. And then it started going downwards. Not until the market started pushing back up and this zone became effective because of the law that says what? All right? There is a law that says whenever the support is broken, retested back on, it becomes a resistance. Now, that resistance is what is going to help to create the lower what? High. Am I making sense? Now, if you want to make money from this, this is where you got to listen up. You have to listen up. You have to listen up because when you understand that the market is going to turn around on its head right here, your work is just to be able to identify that this is a strong zone. Once you can identify that it is a strong zone, you've done like 70% of the job. Because once you've identified that this is a strong zone, your work is, I call it key level. All right? Your work is understanding the candle it needs to print for you to enter the trade. Now, this is where so many traders mess up. They tend to start entering immediately the market gets to that zone, which is really bad. You need to understand there is called liquidity sweep. I've seen that a lot of times in TikTok videos and all those stuff, and I tend to understand that liquidity sweep means blowing your account. And it happens to most traders that are really impatient. But let me give you a secret to entry. I have a video at the end of this video that is a card, but that video is talking about engulfing candle. That is how you can enter a trade perfectly. But I'm going to just brief you on it right now. Now, before you enter any trade when it gets to a key level, you must do this one thing. Be patient. Wait for the market to present a what? A sign, a signal. I call that the CSP. For most of you guys that have been following me but don't really know the meaning of CSP, this is represented as candle, this is represented as stick, and this is represented as what? Pattern. So as a peg strategist, you must already know this. This is candlestick patterns. I usually talk about it mostly in my videos. Now, what am I trying to explain here? What I'm trying to make you understand is very, very easy. Before you enter into this portion right here, you need to have in mind that you need to see one of these candlestick patterns. And this candlestick pattern we're talking about are what? Reversals. Reversals. Now, before I talk about anything concerning reversals, you need to learn about candlestick reversals. Kind of candlestick reversal, I'm going to give you only just one. And at the end of this video, you're going to be learning candlestick patterns on the engulfing and how you can use the engulfing. The number one is I'm going to be talking about is engulf. Okay, no, let me not talk about engulfing because you're going to go learn about that. So let me talk about, let's say, evening star. Most of you have heard this, most of you have not. Evening star, and the opposite is morning star. Now, morning star and evening star, this is for bullish and this is for bearish. All right? Now, before you enter a trade, you can use this chart candlestick pattern to enter a trade. Before you enter, you can use this candlestick pattern to enter the trade on this level. So what do I mean? When the market breaks this zone right here, when it is retesting back up, make sure you see an evening star. This indicates a bearish momentum. This indicates a bearish signal. The market wants to start going down. That is a sign. It is just like the traffic light. You're not just going to start driving all the way. Once you see red, you stop. Then when you see green, that is a sign that you need to continue going. If you see yellow, that is a sign that you have to be ready to start going. But once you see green, it is an automatic sign telling you that, yo, it is time to move. That is what the evening star mean, or a reversal candlestick pattern mean. The market has been going to the upside, about to create a lower high. All right? Because why is it called a lower high? It is high, but not as compared to this one. All right? This one too is high, but not as compared to this one. Once you see the market sequentially providing this, you have yourself a good candlestick pattern. You have yourself a good lower highs and lower low, which is a bearish pattern. Now, if this is a bearish, what is a bullish? All right? If this is a bearish, what is a bullish? Now, we're calling this bullish. Let us say the market starts to go up like this. All right? Then it gets to this point, it starts coming down. Starts to come down, starts to come down. And then it gets to this point again, it starts to go up. Now watch, watch, watch. Now, can you see that the market has superseded this one, this area, which it actually started falling from, right? Now, look at what the market is going to do next. And starts to go up again. All right? It starts to go up again, just like so. It starts to go up again, just like that. Now, you can notice that it has broken this one, right? Now, what am I trying to tell you here? Just as the lower high, this one is higher high. Now, this is a high, right? But when it got to this place, it broke it. The same law that applied towards the lower high, which means the same law that applied to whenever the market is going down and it breaks a support, it turns to resistance. This one is whenever it breaks a resistance, which is what took the market down here, it is going to what? Become a support. All right? So now when it got to this place again, the same level, it took the market to the upside. What you need to understand about zones are, the only problem you might have is identifying if this is a key zone. If this is a key zone, all you just have to do is follow the structure. Once it breaks above here, you buy when it comes back. And then when it breaks above here, you buy when it comes back here. So it takes it to the higher level. But the only problem, like I said, you might have is identifying it as a key level. Which, if you want to learn about that, simple, use the link in description and get the peg strategy, because that is where I'm going to be. I've taught it. I've explained it to perfection, because when you learn that this is a key level, you're not going to be placing trades anyhow, because you already know the actual spot to wait for the market. Take a look at this. I already know that this is where the market is going to come to. That is why I'm not looking out for sales. I already know this is where the market is going to break above and then start buying. It attempted to buy before, but it didn't happen totally. We made up to like $300 from here, but then the market didn't happen totally, and I was taking out at break even. That is a good one. But then you can see the sequential movement like this, like this. So now I need this one to go up here and get to this point, but I'm going to be taking profit at this particular point first. Do you understand? Now notice the sequential movement. You're going to notice that the market has been creating this sequential movement right from time. All right, just as explained. Come here. Now can you see that this was a high, but no, it didn't happen. It broke above and then came back down. This is Euro USD, the 4-hour time frame. All right, now and then you can see that this place still is a high, but now you can see it has broken above and now it is retesting down. So I need the market to get to this point. Once it can get there, that is it. Understanding market structure will make you get profitable, and you will be able to get one of these. In order for you to get funded, we're running the 30 days funding program that is going to help you achieve that. All right. So if you want to get funded, use the link in the description and get the 30-day funding program, and you're going to be joining my private community where I share trades, share signals, and I give insights on how we can achieve this 2025. That's got you guys. If you want to learn more about this market structure and understanding key levels, use the link in the description, get the PEG strategy, and you're going to be added to the mentorship group. And there, I'm going to be dissecting it even better for you. And I hope that this video make you understand what market structure is. And if you have good mentality, if you're really experienced, you can use this to get good information from the market while backtesting. So it is very simple. Lower highs, lower lows is for downtrend. Higher highs, higher lows is for uptrend. All right. Let's get you guys. I'm going to see you in the team. Use the link in the description for anything you want. Peace.